Hey, how are you? It is Ellen Wright, owner of Wright Family Law Group. Today I'm going to walk you through how to complete the Schedule A of your Massachusetts financial statement that you need to file with the family court. So that is either the short form financial statement if you make less than $75,000 a year, or your long form financial statement if you're making more than $75,000 a year. If you are a self-employed person, you get 1099s, you have a business, you need to fill out the Schedule A, which feeds into your financial statement. So the nuts and bolts of how to do it. This is what the financial statement Schedule A looks like. You can find it on the trial court website. If you just Google up Massachusetts Family Court Financial Statement Schedule A, you should be able to find it pretty easily. By way of connection, the Schedule A will feed into your financial statement right here on line D of the gross weekly income section. So that's right here, financial statement that's going to go right on this line. They should agree. So they should tick and tie. The number that you have on your Schedule A should go right there. Now, getting back to the Schedule A itself, it may look like it's asking for a lot of information, and it is. But don't get too overwhelmed by it. You just have to sort of pick away at it a bit at a time. The thing to remember is that all of the numbers on the Schedule A get reported monthly, but they're going to be broken down ultimately into one final weekly figure. Because again, everything in Massachusetts is calculated weekly. Child support and alimony are weekly numbers. So the object of the game here, if you will, is to get monthly business revenue and expenses boiled down to a weekly net income number, and that gets reported down here. But for purposes of today, I'm going to walk you through an example. We're going to call it like a hypothetical pizza shop will be our business that we'll sort of use as an example to fill out this sample financial statement Schedule A. Now, when you do it, have a couple of things ready. You're going to need your bank statements or your QuickBooks. If you have a bookkeeper or an accountant and they keep a QuickBooks, a profit and loss statement, that is going to be really helpful to you and will save you some time. But if you don't, you're going to need your bank statements, a calculator, a pencil, and some scratch paper. Also, feel free to print multiple copies of the Schedule A in case you need to make notes, change things, so that you when you have your final draft, there's a trail of how you got to the numbers that you did. All right, now diving in. The first thing you're going to do up at the top is put in the name of your case. We'll just call it Smith v. Smith. All right. Docket number. If you want to make life easy for your attorney and you know your docket number, put it on in. Then getting into the nitty and the gritty of it, gross monthly receipts. Now, you can report any window of time that you want. The best way to deal with this, though, really is to do year to date. So if you are filing your financial statement in February, a year to date really isn't going to tell anyone too much, because with businesses, sometimes you might have a slow month, sometimes you might have a busy month, sometimes you have everything sort of in between. So if you do a year to date in February, you really only have 1 month of history. So it's not going to really tell the person who's looking at your financial statement much. So if you're filing your financial statement early in the year, what might make sense is to use your past year of history. So if you have done your taxes for, let's say, 2023, and you have those numbers ready to go in February, you can report that. Just make a note that this is These numbers are based on the past 12 months of 2023. This is the window of time, or the snapshot in time that we're looking at. If you are preparing your financial statement later in the year, like right now, today is August 1st. So if I did a 7-month average of my revenue for my theoretical business, the pizza shop, January to July 31st, that's going to tell the user what has gone on so far in 2024. And that will be more helpful than doing a financial statement on 1 month of history, like I had mentioned earlier. So if you don't have QuickBooks, what you're going to need to do is grab your bank statements, and you're going to need to total up your revenue for the period of time that we're looking at. So again, today's August 1st. I'm a pizza shop, and I just put in some theoretical numbers here, maybe what we're dealing with. So I'm a pizza shop. So far, this is what I've been done in gross revenue for 2024. January, I had gross receipts of $2,000. February, $3,000. March was busier. It was $5,000. Things tanked some in April, $1,500. May was a big month, $7,300. June, $2,200. July, and we have a final total here. So total for the year is $26,500. To get the average, we would take $26,500 divided by 7, because it's 7 months into the year. So our average is going to be $3,785.71. So that is a good way to get going on your financial statement. So your average gross monthly receipts would be 3,700, what do we say? 85, we'll just say $3,786, we'll round up. Let me see here. All right, so. All right. Cost of goods sold. Cost of goods sold really are for manufacturing businesses. That isn't an expense that would apply to like a pizza shop. Maybe if you had a hair salon, that might apply if you're selling shampoo and conditioner. But that isn't an expense that would really apply here. If there's an expense listed on your Schedule A and you just don't have it, put 0. And again, like anything else that is financial statement related, please don't leave the line blank. Put a number on it, even if it's 0. All right, the same methodology that we use to get the average monthly business expenses year to date, we're going to do for all of the other expenses. So you would add up all of your advertising costs, January to July 31st. Let's say the 7-month average here is maybe, I don't know, $400 for advertising. Bad debts. If you are a cash basis business, meaning you recognize revenue when you actually received it, not when you get the receivable from your customer or the promise to pay, bad debts really aren't tax deductible, so they don't really play in here. If you're calculating your gross monthly receipts based on money that's owed to you, that is different. If you have a whole bunch of people who have not paid, that affects your receivables. So that is something to be mindful of. In our example today, I'm a pizza shop. I don't have receivables. People pay me for the pizza when I give it to them. So there are no bad debts here. Motor vehicles. This is a unique thing about the Schedule A, which never really made sense to me. There's a line for motor vehicles, but it's sort of giving you subcategories of the expense breakdown. Where it says motor vehicles, just put 0. These categories, gas, insurance, maintenance, registration, those are all motor vehicle expenses, and that's where they get divided out and reported. So, this pizza shop, they don't have a motor vehicle. I think maybe Uber Eats delivers for them. So these expenses are going to be 0 for the pizza shop, but maybe you are a Uber driver, or maybe you are a landscaper. These are expenses that you would have, so you would need to provide in this case, the 7-month average of them taken from your bank statements and report them accordingly. Okay, so you're a business. Are you paying any of your help with commissions? This is a pizza shop. Everyone is probably paid an hourly wage. There are no commissions for our example. Depletion. This is another expense that really is super duper rare. I don't even think in my 15-year career I've had anyone report depletion. Depletion is a non-cash expense that has to do with removing natural resources from the earth, like a mining company or like an oil company. But again, we're talking about a pizza shop and people really don't have depletion. So in all likelihood, this is going to be 0. Dues and publications. This is a common expense for professionals, lawyers, accountants, doctors, who have to pay dues to certain, maybe a union or a dues to a bar association or some sort of professional network that they need to stay connected with. In our pizza shop, not applicable, so this would be 0. Employee benefit programs. If you have employees and you're paying any sort of a benefit program for them, that needs to get averaged out for the window of time that we're talking about, year to date, if that's what we're doing. And it gets reported on this line. This is a pizza shop. They don't have any employee benefit programs, really. All right. Freight. If this was a shipping business, there would probably be a freight cost here. But again, here, not applicable in our example. All right, so freight is 0 here. Insurance expense. Other than health insurance, specify the type of insurance. This expense is sort of easy to calculate because insurance is actually paid monthly. So it's just whatever the business is paying per month. If it's a 12-month type of policy, well, actually, now that I think about it, insurance is usually paid like on a 9-month rolling basis. So you would have to take up your what you've paid to date and take the average. So yeah, stick with doing that. So you're going to, maybe you have workers' compensation insurance. And maybe your policy runs you, I don't know, $175 a month. And maybe you have some business liability insurance. And maybe the policy is $200 per month. So that's where that gets listed. Interest on mortgage to banks. If the business holds real estate and pays a mortgage, the interest part of that monthly mortgage payment gets written down. So whatever that is, look at your statement to figure that piece of it out. This pizza shop, we'll just say they rent. They don't have any mortgage payments, so we'll put 0 there. Interest on loans. These are business loans, not personal loans, business loans. So if you have taken out maybe like a small business loan or any kind of loan, you need to give an average of what you're paying for interest on a monthly basis. Again, if we're doing this, our window of time that we're looking at is January to August 1st. That is 7 months. You add up your monthly payments to date and take an average. I don't know, maybe we have a business loan for something. We'll just say hypothetically, the interest on that loan is $28 per month, average for the year. Legal and professional services. If the business has an attorney or an accountant, anything that you're paying professionals or even like a bookkeeper to maintain the business, list out what that monthly expense is. Again, maybe you pay your bookkeeper monthly and that's all you have, then it's easy. Just write what the monthly payment is. If you hire your CPA to do taxes in April and you don't talk to them again, maybe you divide that out by 12 to give you that average. But we have to have a number on that line that represents what the business pays for legal and professional services. However you calculate it is okay. Just again, make sure you're leaving a trail of how you came up with the number so that if someone is wondering how this was calculated, we know. Let's say that maybe legal and professional services are $78 for the month. Office expenses. So this would be if you have staples, you've got to go get printer paper, you have to pay an office cleaner, maybe you have to pay your lease. This is sort of a catch-all category. Whatever number you use, it's good to sort of keep subcategories, as I mentioned, a trail, so we know what went into this figure. Because office expenses is kind of generic, it's very broad. There's a lot of things that make up office expenses. So make sure whatever figure you use, you're keeping a trail of what it is and how each number is calculated. So maybe we get a monthly shipment from Office Depot for paper, pens, Post-it notes. We pay maybe $2,500 a month for a lease, or that's kind of high based upon the revenue. Let's just say we pay maybe $2,000 a month for a lease, another $100 for home Office Max or whatever. Let's just say we have office expenses of maybe $2,150 per month. Laundry and cleaning. This is, what you might spend for washing, laundering, cleaning supplies, maybe different things that you have in the bathroom. This is also a number that is on your regular financial statement. You can put a solid guess. In this situation, it's a pizza shop. They probably have a lot of aprons and dirty towels they may need to wash. Maybe you could put like a number, maybe $25 a month is what they spend. Pension and profit sharing. That's pretty self-explanatory. In this case, they don't have that. Rent on leased equipment. If you're paying a lease payment for business machinery or equipment, that gets reported on this line. Maybe in this case, their pizza oven is a lease and they have to pay monthly to keep it. So maybe the rent is $150. But again, rent on leased equipment could be anything. Machinery or equipment. This is machinery or equipment that you buy. Let's say in our example, I'm not renting my pizza oven. I had to buy it, and I bought it for $3,000 last year. But let's say the tax accountant told me that I can write it off on my taxes over a 5-year sort of depreciation schedule. I can safely put $50 here, and I'm just going to make a note on a separate piece of paper that that's how I came up with the number. All right, again, you can put numbers here as long as they make sense, they're reasonable, and you're keeping a trail. Other business property. If you purchased other business property other than equipment, machinery, or real estate, that might go on this line. Maybe it was some office decorations or something else, but that would get reported in that spot. All right, for our example, that is going to be 0. Repairs. Did you hire a plumber or an electrician to come to the pizza shop and make any repairs to anything going on in the business? That needs to be reported here. And again, you want to look at your window of time. Did I have any plumbers or electricians come between January and the end of July to help me out to fix anything? If I did, I total it up and I take an average by dividing it by 7, and I would report it there. So for today's purposes, I'm just going to put 0, but again, that's how it's done. Supplies. Sort of a generic catch-all category. In this situation, it's very applicable though, because we're a pizza shop. We are selling pizzas. We need supplies and all kinds of supplies. We need pizza boxes. We need to buy dough. We have to buy cheese. We have to buy sauce. We have to buy maybe bread for submarine sandwiches. So supplies is huge. Whatever your monthly cost is for the product that you're selling, unless you're in manufacturing, in which case it would go up to cost of goods sold, is where you list supplies. All right. And again, leave a trail of how you're coming up with that number and what that number is comprised of. If it's food ingredients, write it out. If it's pizza boxes, write it out. If it's little slips to take orders for people's pizzas, write it out. So in the spot, that's where that would go. All right. So we'll say hypothetically, maybe we do $1,300 a month for supplies. Travel. If you have to travel for your business, you have to go out of state, you got to go here, you got to go there. Maybe you're a consultant and you have to go to different client locations. This is where that gets reported on travel, but we're a pizza business, so that's 0. I did skip a line here, so I'm just going to backtrack. Taxes. That would be, you could safely estimate your monthly tax expense by taking your prior year tax liability and dividing it out by 12 to get a monthly amount. You can't really do that based upon the 7-month window that we've been talking about. But again, whatever you put down, make sure you leave the trail. So maybe we had a tax expense of $2,500 last year, federal and state. Putting that on an annualized basis, coming up with that monthly amount, we divide it by 12, and that would be $208 per month. All right. Meals and entertainment. In your business, whatever you're doing, do you have to wine and dine potential clients for business accounts? I don't know. In this situation, it's a pizza shop, so that would be 0. Utilities and phones. This financial statement dates back to 2007. The trial court has not updated this since 2007. So utilities and phones are all well and fine, but when you pay if you have a landline, and a pizza shop in all likelihood does have a landline, a lot of times the phone is wrapped into the internet bill. So when you're reporting that, you just want to make note. If I'm sending Comcast $200 a month for phone and internet, I want to make sure that that is designated as well. So I would just make a note that on this line it encompasses internet as well. Gas, electric also need to be figured in. So let's just say we pay Comcast $200 a month, and then we pay another, I don't know, $250 a month between the gas and electric. That is a total of $450. And if we divide that out by 7 months, because that's our window, January to July, that gives us an average of $64. Wages. What are we paying people behind the counter? How much help do you have? If you're paying them weekly, we still need the monthly amount. So you're going to take your weekly amount of wages that you're paying help. This is not yourself. This is your help. And multiplying it out by 4.3, because there's an uneven number of weeks in any given month. Not every month has 4 weeks. Sometimes it's more than that. So 4.3 is what we multiply a weekly amount to get a solid monthly number. And that is what you're going to report here for wages. So maybe your monthly wages are, I don't know, $1,500. If there's other expenses, those get listed here. Other expenses could be anything. If you're looking at your bank statements, you're looking at your QuickBooks. Other expenses should be designated on this spot. Maybe you have software subscriptions for your particular industry. If they can't be lumped into any other of these categories, if it's easier to sort of separate it out because it's really significant, it could be listed here. Okay, the key is to make sure you're listing it monthly. Make sure it is calculated, you're leaving a trail, and that it's fairly stated. All right, just put 0 for this. All right, so this is going to self-calculate. Right now, the total monthly expenses is $6,328. Our business income is a minus $591. So this business is underwater. Whoever's going to be filing this financial statement isn't in great shape unless they can sort of turn things around. But this weekly figure is self-calculated by this PDF by taking all of the monthly figures and dividing it out so that you have a weekly amount. So this number right here is what's going to go on page 1 of your financial statement. Now, hopefully your number isn't in the negative, by the way. Hopefully it is in the positive. But beyond that, nature of self-employment or business. This section is where it can get a little hairy scary if you are a seasonal business. What is a seasonal business? A seasonal business is when you earn most of your money in one given season. A super common example of a seasonal business is a landscaper. Or maybe you have an ice cream truck or ice cream stands, or you have a Christmas tree farm, or some other sort of business where you're earning a bunch of your money in one specific season and then it's sort of dry the rest of the year. You're going to need to fill out this section on page 2. Now, it can get a little hairy scary on this part of the Schedule A, but fear not. If you go to the Wright Family Law Group website, I have put together here on the, let's see, the resources page, if you go to online forms here, it'll take you to this screen. And if you scroll down under miscellaneous forms and documents, I have sort of a cheat sheet if you are a seasonal business on how to complete your Schedule A for your financial statement if you have a seasonal business. So this cheat sheet is really helpful for you if you are seasonal. This will walk you through step by step how to do this secondary chart for your Schedule A. All right. I hope that this breaks it down and makes it super clear for you. It should. If it's not clear and you feel like you still have questions, it is best to reach out to your attorney or to your accountant for help. Back on the Schedule A, once you follow that cheat sheet and you're able to get this section 2 done, the final piece is to state whether your business accounts on a calendar year or a fiscal year basis. Every once in a rare blue moon, a business will have a fiscal year end at like June 30th. So from July 1st to June 30th is what their year is. Okay, that would be a fiscal year. A business can pick any month they want to run their fiscal year at. But I would say 9.5 times out of 10, our clients, most businesses, are on a calendar year. They're accounting for their business on a calendar year, January to December. If you are on a fiscal basis, you have to give the court the starting month and the ending month. So you have to fill out that section. Lastly, down here, they want to know your gross receipts year to date and what your gross expenses are year to date. So if you're filling this financial statement out in October, it's going to be more work than if you're filling it out in March, because you have to do more addition to come up with these two numbers, your gross receipts and your gross expenses. So that is the Massachusetts Financial Statement Schedule A for the Probate and Family Court in a nutshell. Hopefully this answers a lot of the questions that you have. If there's something that isn't clear, I encourage you to ask your attorney or follow up with your accountant to help you clarify. Thanks so much for watching. Take care.